Hi traders, today we are going to run through a set of experiments to see how long a trading edge lasts once you've developed it. And here on this channel, I'm not going to say it's going to last 6 months, it's going to last 12 months, and then you just go with it. Because on this channel, we make decisions based on data and data analysis. Because even though right now I am a full-time trader and content creator, before this, I was a programmer and a data scientist. And I never take someone's word on anything. I always take what they've given me and test it myself across many different currency pairs, many different strategies to see if what they say has any validity. First, let's define what an edge is. So according to Google, a trading edge is a technique or approach that gives a trader an advantage over other market participants. It allows a trader to make more profits than losses. So the emphasis here is an advantage over other market participants, because we are effectively competing with everyone else in the market. So when you find your edge and you trade your edge, if you tell everybody else about your edge and they start using it, then it's no longer an edge because everyone's doing the same thing. Before diving straight into the test, I want to give you a little bit of background on the tool and the reasons why I'm doing this particular test. So for the past year and a half, I've been using a tool called Expert Advisor Studio, which is basically a web-based tool. And with a click of a button, you can get this tool to generate a whole bunch of strategies for you on any time frame, on any currency that you want. And the reason I like using this tool is because I am not an ideas person. I don't know if I should mix the RSI with an ADX or the MACD, like what combinations of those would work together when building a strategy. So I let the software build it for me, and then I will use my analytical approach on top of that to figure out which strategies would work best for live trading. And to complement this web-based software, it also comes with another additional add-on you can choose if you wanted to, which is called Express Generator, which doesn't look as pretty as the front end, but it is great for people who have programming background, who want to be able to automate the whole experience with coding. And because I have a background in programming, this is the method that I personally prefer. So this is the output of all the tests I run with Express Generator, which isn't really great in terms of visual aspects, but I have got the process down pat. So you can see the date range here, go increments by month, and the number at the end is a profit. From a big picture perspective, this is overall what the process used to look like. I took 10 years of data to generate expert advisors, of which 30% is out of sample, and I also relay robustness testing on top of this entire process called Monte Carlo. And then I take that strategy that is generated and I simulate live trading on for 2 months. And I repeat the entire process again for another 2 months. So this is my bad drawing, not to scale, but see here, I've got 10 years of data, trade for 2 months, and then I do that again, trade for another 2 months, do that again, and trade for another 2 months. So I stitch all these little 2-month bits together to get a whole bunch of dots, which then I draw lines between these dots to get this simulated equity curve. And I repeat the process 3 times, so I get an average of 3 equity curves. And though this equity curve might look simplistic, to get one test done, it takes me 45 days. So testing using my current process, using Express Generator on 28 Forex pairs, simulating trading for 3 years now, takes 45 days. And that is a very slow and painful process. Because when I first started, I didn't know how long an edge is going to last. So I picked a random number like 2 months. So that's why I have to repeat the entire process every single 2 months. And this is the new big picture view of the process that I am testing today. I'm going to take about 10 years of data, of which 30% is out of sample. I'm going to relay robustness testing on top of this. And then I'm going to take that one strategy and I'm going to test it over 3 years of data. So right now, today is the February of 2025. So going back 3 years is about the start of 2022. All up, I need about 13 years of data. So 10 years to generate the expert advisor and 3 years to simulate live trading. I want to see if an edge can last 3 years. Here you can see one of my tests that I am running right now. Instead of using Express Generator, I've decided to switch to using Expert Advisor Studio because there is a bit more functionality involved, present in especially the Monte Carlo, the walk forward, and the multi-market validation. And I've got it running on the pound Japanese yen on the 1 hour time frame using IC Markets imported data. And the data range ends at the end of 2021 and goes back about 10 years or so. And you can see it's been running for 1 hour and 25 minutes. And if I look in the collection, these are the strategies that the Expert Advisor Studio software has created for me without me having to think up specific strategies myself. If I click on any one of them, it will tell me the exact entry and exit criteria. For example, this one is entering on the Bollinger Bands and it's exiting based on the ADX indicator, which is a pretty good entry and exit point. Once the test is completed, I will then change the data start and end points to 2022 till today, and then I will export this data right here into a different tool because I find this chart here is not great and I want to be able to compare all the different strategies combined. And here is something I've prepared earlier. I've exported the data and I've put it into a special software called Tableau just to visualize it a bit better so I can see the different equity curves. And all these strategies are trading the S&P 500 on the 1 hour time frame because when we do a test, it's important to see consistency across multiple currency pairs, multiple time frames, not just make all our decisions based on one test. So this was about a 10-hour run, which I left overnight, and then 5 strategies came out of that. And you can see I've exported all 5 strategies into this software. So you can see before 2022, January of the 1st, which is this vertical line here. So before that, that was the data that we used to generate our strategies with, which of 30% was out of sample. And then after this gray line is simulated live trading. Before we go on, let me tell you about the sponsor of today's video, Darwinex. If you're not familiar with them, they are a platform designed to reward good traders. You can get a simulated 100K account to trade. Your account then becomes your public track record, which you can then use to attract investor capital and get allocation from Darwinex themselves. So there's 3 different stages. There's the calibration stage, which typically lasts 2 weeks, and it is used by Darwinex to understand your personal style of trading. Then there's silver, where you can get between 30 to 70K allocation from Darwinex every single month and keep it for 3 months. And the 3rd stage is gold, where you can receive up to 500K and keep it for 6 months. They've recently released 2 100K permanent allocation options, which you get to keep forever. I've personally been trading with Darwinex for 1.5 years, and I've received multiple payouts from them and I made it into Darwinia Gold. If you're a trader and want to make some extra money, like the top account, which has received over 900K in payouts, then I have a discount code below if you decide to sign up. Back to the video. And if you've been watching my channel for a while now, you'll remember that from my previous videos when I did a whole bunch of tests, I found that generally when you have 5, 10, 100 strategies, generally the one with the smoothest equity curve is also the one that performs out of sample the best. And each time we learn something, we want to apply that lesson learned in any future tests that we do. So here in this particular test, we have 5 potential strategies, and the one with the smoothest equity based on our previous learnings should be the one that performs best after the vertical line. So let's take them all out. Number 1, the equity chart is pretty smooth and you can see it performs the best out of sample. If I show you the others quickly, you can see the other equity curves aren't as smooth, aren't as profitable, so that's why they haven't performed well outside the vertical line. The best one in this scenario is the blue line with the highest R² rating, and also out of sample it also performs the best. So we've confirmed from our previous tests we're reconfirming the lessons learned from before, that the smoothest equity curve before the blue line also performs the best outside the data period. And it's great to see that this particular strategy, created up to 2022, performed well. So there was a stagnation period back in 2020, end of 2023, and now it's performing much better, which is okay, because that strategy was a long only strategy, and in 2022, the entire year, the S&P 500 was in a down period. Starting from 2023 onwards, we started seeing upwards movement again, which is fine. So in 2022, we know that it is very hard to make profits on a long only strategy when the overall market is down. So when the market recovered, we can see the strategy again performing as per usual. Here are another bunch of tests that I ran. Similar scenario with taking 10 years of data to generate the expert advisors, applying 30% out of sample, adding Monte Carlo and robustness testing on top of that, and then simulated trading for 3 years after the 1st of January 2022. And here I've got the same tests on different currency pairs. Again, with our simulated trading from the 1st of January 2022, we can see that this particular strategy continues to perform even 3 years after it was generated. There is a bit of a stagnation period from 1st of July 2024. This one does seem to be going sideways. Apart from that, it has been going well for the past 2.5 years. Let's go through a few more currency pairs to see if there is consistency. Let's look at pound Japanese yen, and this one again is performing well since the 1st of January 2022. It's still making profits and higher highs every single month. Let's look at a few more currency pairs. Let's look at New Zealand Japanese yen. This one again is doing pretty well. There is a bit of stagnation. Looks like from the 10th of October 2022 till May 2023, so about 6 months, we saw a stagnation period here. And last time we saw a highest high was back in July. So again, now we are seeing about a 6-7 month stagnation period in this particular strategy. Let's look at a Canadian Japanese yen. And this one is also doing pretty okay. Again, another stagnation period of about 8 months, I think, for this particular strategy. But it is great to see a number of different strategies lasting multiple years. So potentially I don't have to be creating brand new strategies every single month. A strategy that I create can potentially last a few years. Notice also that the period that I am using to generate expert advisors, this period right here before the black line, is a fairly lengthy period. So I'm going all the way back to 2012, so which is about 10 years of data. So because I'm using 10 years of data, so these strategies are lasting about 30% more. Whereas if you were just using data for a year to generate your strategies, I don't expect that particular strategy to last multiple years. Now, I'm really happy with the results of this test. It has confirmed that a strategy's edge can last multiple years if you are using large amounts of data, like at least 10 years to generate your expert advisor strategies. And I can use the lessons learned based on this experiment to improve and make my entire testing process much faster. Before, it took me about 45 days to run one test over multiple PCs, crossing over multiple currency pairs and timeframes. Now I can fix up a test, run over multiple currency pairs, multiple timeframes in about a week, which is fantastic. Because the goal here in my 3rd year of Forex trading is to build a balanced, diversified portfolio of multiple currency pairs and multiple timeframes, because that is the real secret of long-term success, having multiple strategies work for you in a balanced portfolio. In my portfolio, I've already got my very first strategy. If you want to see how I built that very first strategy, then watch this video right here. Thanks for watching. Bye.